What is going on, guys? Welcome to our Finance Tuesdays. I hope you're off to a great start to the week and that you're doing very well. We're going to be talking about when do you borrow from your life insurance policy. Now, I've been using life insurance for the past 4 years. I've paid off over $50,000 of consumer debt, paying off my credit card debt, my car debt, and now I'm getting ready to pay my wife's car loan by next year and probably my Sallie Mae as well. So the only thing I'll have left over is the federal loan debt, which is a great place to be. With that being said, when should you borrow? Well, first off, you want to make sure you have enough capital to borrow to do three things. One, pay off your debt. Two, invest. Three, invest in education. The reason why I say education because I actually used it one time where my wife was going back to get a certification, borrowed from the policy, and the result was she's now a nursing assistant and she's on her way to being a full-time nurse. So, there was an incentive there to borrow from the policy and get her career started. That's one thing you can do. Another thing that I like to do is borrow to pay off debt. That's the main priority of why I'm using it right now. So when I borrow, the money is still there in the cash value. It never goes away. So when I borrow, I use it to pay off debt. So let's just say my credit card debt is $4,000. And let's just say I want to use the bank to make chunk payments. Well, the problem there is you pay a high interest, right? And at the end of that result, you are going to be left with nothing because you don't have anything saved. Whereas if you keep in a life insurance policy, let's say you borrow that same $4,000 and your cash value is at $7,000. Well, the $7,000 isn't going away. Yes, you have that $4,000 loan, but what you do next is you pay yourself back. And then as you have a forced savings plan, because you're still saving on a month-to-month basis, you're saving and paying yourself back at the same time. Now, you do have an interest payment when you borrow from your life insurance policy. However, you only pay interest on an annual basis, not a month-to-month basis where you have a credit card, you're making those chunk payments. But guess what? You're still paying interest on a month-to-month basis until the debt is paid off. Whereas if you borrow from the policy and you pay that off, well, guess what? You have interest, yes, but you can end up paying 1 to 3% on a annual basis because you're paying yourself back. Therefore, you are bringing the interest payment down as you pay yourself back. That's the beauty of using life insurance. And when else should you be borrowing from your life insurance policy? Well, after you are debt free, this is a key part. You want to make sure you have no consumer debt. You start investing. You can put it in things like real estate. So let's just say you have a real estate deal where it's going to earn you 8 to 10%. Well, you're still making your 3 to 5% on an annual basis in the life insurance policy. Again, it's not an investment, it's just a store of value. So you're earning in two places at the same time. And the great part is the money's growing in both sides. And remember, you're still going to pay yourself back into the policy so you can restore your capital to go after the next deal. You see, that's what's great about life insurance. You're controlling your liquidity, you're controlling the capital, and now you can use it how you want. Now, you don't want to do it irresponsibly. Like, let's just say you want to use it for vacation. That's just a bad idea, in my opinion. Or you want to buy a consumer product. That doesn't make any sense to me. You might as well just pay for it with actual cash or from your bank. That's just how I see it. If you do this correctly, you're going to see a lot of advantages to using life insurance. Another thing is you can invest in personal development. Like maybe you want to buy a YouTube course. Maybe you want to invest in your education. There's a lot of different things there that could actually make sense. I gave you my wife's example where she used it to get a certification and then we just paid ourselves back and now she's reaping the benefits of launching into her career soon. So it's just different creative ways you can go about it. I don't recommend using it irresponsibly. Like I said, buying like consumer stuff is just a bad idea. Like it doesn't make any sense to me. You should only use it for three things, in my opinion. Use it to first pay off consumer debt. Make sure you're paying yourself back because remember, you want to rebuild your capital. And why would you want to have a high interest payment at the end of the year? You might as well keep that down as low as possible so you can save on interest. That's another thing. When you're paying with life insurance, you're saving on future interest. That's why I'm using it. So that's the first thing you want to do. The second thing is use it to invest in things like real estate, like gold. Another thing is education. So there's a lot of different things you can do with it. If you got any questions, love to hear from you guys. Make sure you guys like and subscribe to the channel, and I'll see you in the next one.